Happy New Year. Bitcoin is trading at $45,700, making a massive move to the upside on January 1st. Exactly what we all wanted to see, all in anticipation of a potential approval of a Bitcoin spot ETF, which some, including Reuters, are saying could happen as soon as today. Bitcoin is pumping, ETF is coming, kind of washing out a lot of the bad news that we've discussed on this channel, at least for the crypto and Bitcoin market. Can't wait to do Macro Monday on a Tuesday again with James Lavish, Mike McGlone, and Dave Weisberger. Guys, you do not want to miss this one. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and smash, I said smash for the first time in a long time, smash that like button. It is a new year, new me, new you, new all of those things. But what we do have is some new price action with Bitcoin and some new hype about the approval of a Bitcoin spot ETF. Let's get right into it now. I've got Mike, James, and Dave, all four of us, guys. It feels like it's been a while. Welcome back. Happy New Year. Is this thing getting approved today? Is that really a possibility? That's coming from Reuters right here, not me. The SEC may notify Bitcoin spot ETF issuers as soon as Tuesday or Wednesday. They've been cleared to launch the following week, said sources. Of course, we wouldn't probably hear about that today. Let's be honest. If they're going to find out, that doesn't mean that we will. But this thing's
I think
coming,
after
right?
that, yeah, I think after that, that Reuters article came out, I think BlackRock had a comment that they don't expect anything, before the end of this week at least. I think I saw that somewhere as well.
Yeah, it's the 5th is the last day of the comment period for one of them. So that's what our buddies say. Scott, I think that's the most likely.
So that gives us till Friday. They don't usually do those things necessarily on a Friday. But like I said, either way, this seems like we're getting into the inevitable phase. We have a ton of updates. I don't necessarily have the full summary. I can just tell you we've seen a lot of them naming their APs. Ironically, JP Morgan being the leader AP for many of these filings, as Jamie Dimon goes on TV and in front of the Senate and Congress and talks about how cursed we are and we're the worst and Bitcoin shouldn't exist and we should kill it all. Never.
But their fees. But you said their fees? Oh, okay. Yeah.
I can make money.
Okay.
Yeah. But I mean, and now we're already seeing two other things. We're seeing the marketing war begin. We have a Bitwise commercial. I know a Van Eck commercial. Mike, as you said, grayscale advertising all over the place, everywhere you go, every airport. And now we're having the fee battle, right? I know I saw that Invesco, Galaxy, Novogratz saying they're going to waive fees for the first 6 months. We're seeing some come in, I think, as low as like 0.49%. I don't want to quote it wrong, but this is really, really beginning to happen.
And it also demonstrates just how strongly Bitcoin has decoupled from risk assets and is absolutely beholden to this ETF event horizon. So this is an event-driven trade at this point for some people, and long term, obviously, it's not. I'll own it forever, but at this point, it's acting like that.
Well, you'll own it forever, also not in an ETF.
Correct.
So there's
because
the go ahead, Dave. Yeah, go ahead, Dave. Yeah.
Well, the one thing that's amazing today, and I just look at that's kind of stupid, but the futures spread to the CME futures right now is up to right now it's around 230 basis points. The scale is kind of crazy, so hold on. Now 240 basis points, which is insane. We're talking literally something that's going to expire in 24 days. So even no matter what your interest rate is, that's crazy. So what it's telling you is this rally is there are people who got caught short in the U.S. that only use futures to buy it, and they're buying it, which when this spread inevitably comes down, you'll see some softening. But that's assuming that whoever's short has been able to get what they needed to get. And it's, we've seen this a couple times. The last time we saw the rally that it go like this, the rally had legs until this spread came down. Probably the single most important indicator for traders to see, just so you can look at what I'm looking at really quickly. Where are we? We'll do that. This is our dashboard. But you can see this is the thing I'm looking at right here where I'm waving my cursor around. That's the spread between Bitcoin USD spot and the January future on the CME. And those numbers are big. I mean, that number realistically, the way it normally trades, you would expect that number to be somewhere around 120 basis points would be healthy, but still high. You could make money at it. 240 is crazy. It's $1,000 spread to put that in perspective. So it's kind of nuts.
I'm just interested in how many tabs you have open on that window. It's like 30.
It's because I'm lazy. I open stuff and close them. I can't help it. But it's like when I'm looking at stuff, it's like, so I have one of the dashboards that have the spread situated, another one that has other pairs of altcoins and things, and then looking at statistics, who's trading through our system, alerts, and all the other stuff, and then all the stuff that I'm writing, like specifications and stuff. So it's kind of nuts, but what?
Yeah, I mean, when we're looking at funding, Dave, you're talking obviously about the spreads. When you're looking at funding on those perpetuals, it's literally the most expensive it's ever been in history to be long. By the way, that's not generally a bullish signal, right?
No,
I mean, this is the funding rates on every. And when you look, I mean, when you annualize it right now, it's costing 66% interest annualized effectively to be long Bitcoin right now. You're getting paid massively to be short. And this is the setup.
Which exchange are you talking about?
This is from Matrix Point. If you annualize it, like I said, these roll like every 8 hours.
Well, okay, but I'm looking directly on the exchanges. So Binance Futures funding rate is 0.06%.
Yeah, that's right here. 0.0678. I'm seeing, yeah.
What?
I'm seeing 0.0678, but this is on CoinGlass. But that's
same thing.
Yeah.
That's not. It's been much higher. But yeah, the fact of the matter is and the reason they're doing that is that their inverse perpetuals right now are trading at about a $60 premium, not $1,000 premium, $60 premium, which is and until that premium goes away, which it will. I mean, it's lasted. I can remember the first all-time time we made the all-time high, and then the second time, one was 2 weeks, one was 3 weeks, where the futures were trading, the inverse perpetual swaps were trading between $50 and $80 above. Actually, no, it wasn't quite that, but whatever it was around these levels, maybe a little bit higher for 2 or 3 weeks, which is insane. It just basically goes to show you that there are speculators out there that are covering their shorts. I mean, I made a tweet this morning, and I think it's important for people to understand. When you think about the Bitcoin market, you have to understand that the ETF is bringing in a sea change. I always look at it this way. It's a mental model that we have crypto native folks, us, who when we trade, and I don't trade on leverage anymore, but they're the crypto native folks who rotate between Bitcoin and Ether. Yeah, sometimes you get new money to invest. Sometimes you put cash on the sidelines, etc. But it's crypto native folks. And those people, quite frankly, tend to be the chasers, the leverage pushers, the reason we get blow off tops and big sell-offs and all that stuff. That clearly has flipped as we turn into January from cautiously negative to uh-oh. And so that's what we're seeing today. The second category are you call them the DCAers, Mike Alfred's, I think you, Scott, myself, James, people who are Bitcoiners, who believe in Bitcoin and who are putting available assets into Bitcoin, but for the most part are holding on to what they have. They're not selling anything, and they're very patient in buying. Those people are starting to get less patient and getting closer toward fully allocated. So you're seeing that. The third category is the one that matters. That's the one where Mike and I disagree on. And the third category are the noobs, the people who are yet to be converted to Bitcoin, which is the vast majority of humanity, as much as we don't like to admit that. It's just true.
That's
so it's all the big pools of money. Those people there are a few, it's a trickle now of people dipping their toe in ahead of the ETF stuff. But the reality is the actual approvals will turn that trickle into a stream. So you'll get more. But eventually, for it to turn into a raging flood takes time, and the marketing and whatnot, and people have to become convinced. And there's a concept in every building of a network, and Bitcoin is a network at its core, called critical mass. At some point, you reach a tipping point, and that tipping point, which we are a long way from, is Bitcoin at a value, at a market cap beyond gold, where people say this is the new store of value, and volatility starts to decrease. Why? Not because of the price, although that certainly won't hurt. It's because that third category, it becomes mainstream. Bitcoin goes mainstream, and the control of the asset price is much less in the hands of the crypto native speculators. And that's really kind of my mental model. So when I look at this morning, I mean, yeah, I'm pleased to see it, but it looks like the kind of move that could easily get faded when they don't approve an ETF today because there's common periods open. But clearly there's some people who are just afraid that this could happen. They read the Reuters story and it's like, uh-oh.
Yeah. I mean, listen, it's trading. I'm not going to say it's been approved, but like I said, the approval could be direct from the SEC to the issuer and not public for quite a while. I'm just showing a chart. I mean, it had obviously a pennant. It was in for a month. If you are a classical chartist, this is the most classic bull pennant you get, right? And this is targeting, it never hits target, but 54,000. But you're up 7-8% since that Reuters story came out. I'm not saying it's the reason, but maybe there's somebody that knows that these things are approved and it's starting to move, or maybe it is just hype. But I mean, this is a absolutely beautiful chart. And I mean, it's, you know, it's been 2024 for all of like 36 hours, and we're trading, you know, up 7-8%.
Right, but the key word here is delinking, and I know that you know, you said it makes me smile. It's my victory lap ish, but I don't really want a victory lap. What I really want is for things to play out in the way that I want them to play out. The absolute reality is the backdrop of all of this. Let's not kid ourselves. The biggest headwind that Bitcoin faces is still macro, if you believe that we are going to see a dump in risk assets. That is still the biggest potential headwind, which is why I'm teeing you up, Mike, so be ready. It's time for the first morning call of the year.
Yeah, they didn't have one today, right, Mike? But you do get to respond and give your opinion anyways.
Well, I need to point out, we do agree completely on the macro. I got so sick of writing about it 5 years ago when Bitcoin was cheap. When it looks expensive to me, I like to focus less on the diminishing supply, increasing adoption factor, and ETFs. I mean, it's something that we all get. It just when it was this time last year when it was extraordinarily cheap and Solana was down 97% or something, it was just silly, stupid cheap. Now it's getting a little silly expensive. But to me, and I completely agree with the macro, is what's happening today is insignificant. Even with this morning, with the equities down about 1% and Bitcoin up 8% on the year so far, is kind of a little bit bubblish. But the fact is that if we look at the last 2 years, the risk this year is just a normal reversion of what happened last year. So everything went down in 2022. Bitcoin went down the most. Everything went up last year in 2023. Bitcoin went up the most. What's the problem now? We all have nothing but the bullish hopium, which is great. It's this way it should be. But as a responsive, rational risk taker, you got to be careful getting overweight long here. Now, 15 at the end of last year was, you take the risk there. But here's the problem now is, we look at one asset I see settling and reaching all-time new highs. That's gold. And another asset that's continuing to creep lower and showing major global economic risks. That's crude oil and copper. And then we look at, you mentioned, bond yields, and they're still declining. This tilt towards recession, I think, might accelerate, partly because last year was too many people leaning that way. Now we're all leaning the other way. So I look at 2024 is going to be a very simple year. Now we're going to have issues that we can't predict, but very simple in terms of doing the exact same thing it did last year. Reversion's your biggest risk. Now, less so in commodities, I think, because they're still too expensive and they're heading lower. But the biggest risk is risk assets. We all seen the NASDAQ up almost 50% in 1 year. And China's heading towards recession. Europe's heading towards recession. The Fed hasn't started easing yet. We're still well behind that. And Bitcoin is one thing we've certainly, I think, concluded in the the 20 minutes we've been talking already this morning, it's this Bitcoin is the world's #1 24/7 traded vehicle, and it's still a risky asset. I mean, it still trades 2 to 3 times the volatility of gold and S&P 500. So I look at it as this year, if you were sternly bullish and you bought some GBTC at the end of last year, are you overweighting or are you lightening up this time of year? Rational. You know that we always get the silly people in at the peaks and the troughs, but now it's getting a little silly, and we haven't had the ETF yet. And I completely agree. Yes, the ETF is going to change everything, but some of us have been waiting for this for 5 years, and we've had a decent appreciation.
Yeah,
James. Go ahead. Yep.
Well, I mean, look, you guys have done this as well. I know Mike and David have also done this, but when you're in the event-driven world, the beta to the rest of the world goes to pretty much zero. It doesn't matter when you're in an purely event-driven situation, and it's trading off of that, right? And so what's interesting about this is exactly what you just said, Mike, is that it is a risk asset. It's the leading risk asset. It's been the leading risk asset. It's the tip of the spear of risk assets for years. But the reality is that if and when we do get ETFs approved, there will be capital that comes into this, and it eventually will have there will be enough capital that comes into it that dampens that volatility, in my opinion. And that in and of itself is part of this event-driven kind of, I hate to say trade, but activity, price action. The event-driven price action is also factored into this. So that's the interesting part about this. Nobody knows where Bitcoin's going to go, obviously. However, this is the most fascinating event-driven trade I've ever been involved in. It's incredible how this is acting, as opposed to what it was acting like just a year ago. And so
I mean, yeah, well, it's supposed to be a year ago. The funny thing is like, I kind of wanted to write about this. If you ever study, when I was in school, I took so many intro courses, it was crazy. But intro to sociology, they teach the Yanomamo Indians in Amazon, slash and burn agriculture. And basically what happens with this group of people, and this is why there's issues in the rainforest, by the way, is they realized that the most fertile ground ever is if you burn down an area of the forest and then till that into the soil. It makes the soil incredibly fertile for crops.
Yeah.
2022, crypto damn near got burned down. And, you saw so much happening. And in 2023, crops were being planted. And people are saying 2024 is when we're going to start being able to harvest some of those plantings. Now, it's not a perfect analogy, because the reality is part of the reason that it needed to be done is we had fraudsters in our midst, right? Mashinsky committed fraud. Steve Ehrlich not convicted, but I think that his representations, I believe, were fraudulent. I'm sure Scott would agree. God knows Sam Bankman-Fried's been convicted of fraud. Do Kwon, he hasn't been convicted yet, but it's coming. And lots of people around that. And there's still a lot of crap in the industry. We all understand it. Whenever you have this kind of money being made by people, it's a honeypot. Anyone who traded internet stocks or OTC stocks in the early 2000s and the late 90s know you're going to attract enormous amounts of fraud. And in fact, the crypto frauds on a scale were still tiny relative compared to WorldCom and Enron and all the other crap that was going on back then. But the fact is that needed to be cleared out. Binance was a big overhang, and we've talked about that in the market, and more or less that's cleared out. There really isn't any overhang except for what's an existential battle for DeFi and for self-custody versus the Elizabeth Warrens of the world. But I don't think people in crypto think they're going to lose that. The difference is there were lots of people in crypto who believed there was a chance that every one of those other bad things could be an existential killer of Bitcoin. Those are gone. And so when you're looking at an environment, now the question becomes, really, is Bitcoin going to lead the pack by being the global store of value? And if it gets to critical mass because all these potential impediments have gone away, then those bullish flags become very interesting, right? Because, where's price discovery? The funniest part about all this is if we were having this conversation and we were, and 45,000 was a new all-time high, it's a different call. But the reality is the all-time high, not just once, but twice, was over 60,000, right? Months apart. So we're not even recovered back to where we were when the hopium was being mainlined. I mean, when Mike was completely right, and I'm sure, I don't know, we weren't really talking back then, but the fact is when Bitcoin traded past 60,000, not once but twice, there was a lot more hopium. Understand, the network, the hash rate of the Bitcoin network is more than triple now.
And by the way, I think yesterday was an all-time high for a single day in Bitcoin transactions.
Right. So if you look at
Actual
what's
usage
going on, that compared to the previous all-time high, you have triple the size of the network. So arguably, people who care about fundamentals in Bitcoin will look at it and say, okay, well, we're triple that, so we should be at 180,000. Okay, cool your jets, but the truth of the matter is that's what they're going to say. The second thing they're going to say is that, wait a minute, it's about to be unlocked for 90% of the world's wealth, which it was previously really inaccessible to. At least 90 may be too high, but 70. And we don't know what that's going to be, but we know that's going to be large. And at the same time, you had Michael Saylor 2 years ago pitching to thousands of corporate CEOs and CFOs. And basically all of them said, but our board won't let us buy this because the accounting treatment has changed. As of today, anyone whose fiscal year starts from now forward can adopt Bitcoin on their balance sheet without any issue. And I urge everyone to read Ross Stevens from, year-end missive, talking about why he not stealthily, he told people about it, but no one really thought about it, used Bitcoin on his balance sheet to understand that's another pool of capital that's available. That's why I think of the D-Link. That's my reason.
I mean, we've had the D-Link for almost a year. I'm not saying that they won't link again. I think we all know that all correlations go to one in a black swan or in a major collapse.
Right.
But Bitcoin's kind of been doing its own thing to some degree.
But it's important to understand Mike's base case for the stock market, which I tend to agree with, is this will not be different. When the Fed starts cutting, it's going to be, the market's going to sell off.
Mike, I want to talk about that right now because Bloomberg just did their Outlook 2024. And we kind of I see in the comments and I see people talking about this consensus idea that everything is mega bullish, new bull market. I don't know that that's really the consensus. I think people are very bullish on Bitcoin specifically because of the ETF, the cycle. I think there's a lot of reasons, but I don't think people have gotten there yet on the macro. You talk about here's almost everything Wall Street expects in 2024. By the way, they're always wrong on the consensus. So if you read the article, they say, listen, everybody's sort of in the middle. So we're probably going to get either a massive sell-off or a massive pump, right? We won't have a calm year as everyone's predicting. But we can just superficially look through these, right? This is literally like institution by institution. BlackRock. Our bottom line for 2024, this is a regime of slower growth, higher inflation, higher interest rates, and greater volatility. The Brandywine, the odds of recession are not trivial. BNY, we expect a healthy and welcome slowdown next year. The consensus, I read through a bunch of these. Every single one says probably a recession, but maybe a shallow one for the next year. But everybody hedging. Invesco, we think the global economy is entering a brief period of below trend growth driven by recent monetary policy tightening, blah, 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 blah. Guys, there is nobody willing to stick their neck out, at least from an institution right now, and say, hey, man, new bull market, this is going to go crazy. I mean, Mike, what are we missing here between what it seems like people are talking about on X and what these institutions are saying? Because it seems like everybody's sort of in your camp, although maybe not expecting quite as much downside.
Well, I think it's classic human nature. Anybody who was wrong in the stock market last year, which I was, has to really be careful and hedge. And you can't keep saying the same things. But it reminds me of what that famous quote from Roger Babson in September 1929 is, I will repeat what I said to you the year before and the year before that, when he was bearish on the equity market and he was wrong. And it's just, I think it's a similar situation. But here's the key thing way I look at is I have never in my many decades in the business seen a global market so completely dependent on one thing going up this year for us not to tilt towards significant global deflation. That's the US stock market has to have an up year. Because if it doesn't, everything I see from commodities is tilting towards global deflation. I mean, gold's the only thing up. Everything else is down. Okay, that's already starting there. The hikes that we're just hiking. Every country, most central banks were just hiking back in September. That's right when crude oil peaked. crude oil goes up. What does that mean? Well, they can't cut because it means inflation. It's just one of those things. I just look at the risks are so great that it probably says to me is, well, why take that risk? I mean, just be underweight. And there's alternatives. No, there's Bitcoin, but I think Bitcoin, if the equity market goes down, I think Bitcoin will lead it. And obviously today's not the best example. It's one key. But it's the thing is, the bottom line is there's so much risk tilted on this one asset. I say the U.S. stock market because if you measure it versus global GDP versus U.S. GDP versus the rest of the world stock markets, it's the most expensive ever. It's just, okay, thank you. I mean, the U.S. is a great place, but at some point you have to expect just a little reversion there. And then you have that deflationary tilt, which I think, I'll end with this, is completely history will look back. And if we get deflation this year, it'll look back and this, it's completely a normal reciprocity to that extreme inflation we had to the peak in 2022.
So I have a question for you, Mike. What do you think about this theory? I feel like the S&P, NASDAQ, basically the Magnificent Seven, and the stuff it's carrying along, feels to me a lot like it did in 2000, or is it 2001? Yeah, when people had to sell because of capital gains in March, caused some rather vicious downside action, which recovered before it finally, it did rally back and then got crushed again in the fall. But the spring was the shadow dump. I feel like the stock market, which is still dependent upon cash flows of companies as opposed to protecting the value of one's asset, and I will always do that, is set up for, and back then it wasn't everything that fell, it was all the high flyers that got crushed, but the internet stocks had a shadow crush. It feels to me like everything that people had to sell, because we know that people have needed to take gains to fund their Christmas presents and all their spending, which we've seen been pretty high. It feels to me like there's a real potential that tax season could be a little bit of a pin to that balloon that you're talking about. I'm not saying it's going to happen, but feels like a real possibility to me.
It makes a lot of sense. And one thing I really enjoyed about cryptos early on, and those of us who've had to write checks to the IRS all our lives for capital gains and deduct the losses, is when they were all these people who made so much money in cryptos, I would speak to them and off the record would say, I'm not paying taxes. I'm like, are you nuts? You got to pay your taxes. The IRS will always get you. It's just a lesson I've learned from my brokerage friends who their accounts would be cleared out because the IRS would just jump into their accounts. But that, to me, I think that's a key factor. I'm glad you brought that in. But something I want to tilt over to also is the amount of easing we have priced in which James is an expert on too, in Sofer futures is right now about 150 basis points for the year. And I look at that as, okay, we raised 100 basis points last year. And you look in the big picture, well, that's not a big deal. But what's going to take for them to really cut a lot and to cut that much? We all know, I think it's going to take weaker equity markets. And I look at it as the key thing is also with the election coming up is the market's just priced for so many, it's just so expensive now in terms of stock market, and there's so much easing priced in the system. It's just almost a complete opposite of last year. We all know, okay, is it going to be that easy in 2024 where you're supposed to just say, yeah, okay, made a lot of money, maybe I should just take some, and as we head tilt towards tax season, then you're forced to take some, and you don't want to be doing it on a downtake.
James, I think you said last week how every single thing was priced to perfection right now. I would say now they're overpriced beyond perfection, but Mike obviously just brought up Sofer. You wrote a newsletter, by the way. I'm going to give the soft pitch right now for the informationist for all of you guys out there. I don't know why I don't tell you about this on literally every show, but it's one of my favorite newsletters that James writes weekly. Incredible. But that's exactly what you talked about this week, is sort of this smoke signal and the cost of borrowing overnight shooting up massively, which Preston Pish, your friend, said here in this tweet. I mean, maybe this isn't the biggest smoke signal we've ever seen from this indicator, but it's just yet another one of these, how is this all happening in the background and things are still going up situations?
Yeah, exactly. And it's not the biggest smoke signal. So first of all, let's back up really quickly. And thank you for the soft push. So what is Sofer? Sofer is the secured overnight financing rate, right? And it's basically what the Fed has created to take the place of LIBOR, because LIBOR. So the basic difference is that Sofer is based on real transactions, and LIBOR was based on like surveys of transactions, like estimates. And so it was really easy to manipulate LIBOR. And so the thing is, when you have a Sofer trade settle, something that's based on Sofer, it's based on collateral. Whereas LIBOR, I mean, we had LIBOR trades and LIBOR based interest rates on things that didn't have any collateral, and hedge funds, basically just derivatives, you know, and so derivatives on derivatives. And so super easy to manipulate. So that's really important to understand that Sofer is difficult to manipulate. That when you see a Sofer pricing, it's real. It's a real trade, and they're monitored, and so you can see what's actually happened, and they're accumulated, and they take averages to simplify it. But basically, what you're looking at is you're looking at the Sofer. What's important to look at when you see Sofer is what is the spread between Sofer and the effective Fed funds rate. So you have the Fed funds rate, which the Fed sets, but then the effective rate, which is actually where transactions are being settled in the market. Remember, Fed funds, I mean, these are day-to-day borrowings and lendings from bank to bank that they're charging each other close to the Fed funds rate, but they're not demanding. It's not based on collateral. Let's put it that way. So on the last day of the year, Sofer jumped. This is not atypical, right, Dave? I mean, we see this where it will jump, where you have banks and you have financial companies, hedge funds move large amounts of capital in order to rebalance their balance sheets and their positioning and their risk parameters. Really, a lot of it is just window dressing often. So at the end of the year, you'll see these things move, and it could be just window dressing. So I expect today for this to go down to where, back to kind of the level where it was. Is it a big move? Yeah, it is. I mean, when you look at what happened to the Sofer spread compared to SVB collapsing, this is above that. So it's a big move. So what it does tell me, though, is that there is a larger need of liquidity out there, possibly a much larger need of liquidity out there than people are maybe attributing. And so it's a smoke signal in that, hey, if we do have a problem, let's go back and look at what happened in 2019 and look at where Sofer went then. And that'll blow people's minds because, many people probably don't even remember this, but in 2019, back in the fall of 2019 in September, Mike and Dave remember this well. You had a situation where there was so little liquidity that the Sofer pushed all the way up to almost a 300 basis point spread to Fed funds, which is just mind-boggling. So obviously the Treasury and the Fed had to step in and inject liquidity because it was just a confluence of events where the Treasury had a big auction. It was settling the same day as tax payments were due, and companies were moving money around for tax payments. It was a fumble. Let's put it that way. It was a liquidity fumble from the Treasury and the Fed, and they had to step in and basically, shore up the Treasury market because it did get unruly. And so it was a pretty scary moment for people in that financial sector of the market. And so that's the kind of thing that I'm looking for on a red flag. Hey, we have a problem in the Sofer world. But by then, honestly, it's too late. So it's really, you're looking at things like, all right, the reverse repo balances are being drawn down. Once those are gone, then you're going to start seeing repo balances go up, because what the Fed did is they instilled, it's a daily repo facility that these companies and financial companies can use, the banks can use to prevent something like this Sofer situation. So if that all makes sense.
Yeah, that all makes perfect sense. I think, like I said, it's just one of those multiple smoke signals when you look at the plumbing. It just
you're
looking
really
at
working
the working behind the scenes, but
it's going up. I mean, it's on an upward trajectory, that the volume is going up. So let's see where this goes, and what is going to trip that and make it and make people realize that when there's so much leverage in the system, that when there is a need for liquidity, it will be too late. And that's why I keep saying that watch out for a credit event, because when there is one, it's going to be too late. There's going to be the need, like long-term capital management. There's going to be the need for one or a few entities that are interlinked that will cause so much contagion that it would threaten the collapse of financial systems. There's just that much leverage out there. I'm not saying that's happening, but I'm saying that the problem is that it's a non-zero probability, and if and when it does, hang on tight.
Yeah, Mike, okay, Dave, I see you have something to say. Go ahead, and then I'll ask Mike a question.
Well, I mean, I think it's really simple to understand that a lot of and I love Mike's words, so I'm going to plagiarize again. A lot of the hopium that exists in some markets has to do with the look, 150 basis points of cuts priced in is insane unless you actually believe there will be a credit event, because be simple, there's no effing way they're going to cut that much unless there is a threat and seize up in the financial system. If all of a sudden now the market is betting that the Fed is going to see this in advance and prevent it from happening, then that will be the first time that they ever ever were successful proactively. Have they ever been proactive in your estimation, James?
No.
So I think it's really important to understand that when it sounds very clinical, but a non-zero risk of a credit event sounds clinical. What James is saying is there's a non-zero risk that 2008 repeats.
That's right. And so the problem is, it's not that there's I'm not saying that there's an 80% chance of a credit event. What I'm saying is, and risk reward probabilities, you have to include, that you have to include that delta move off of where you are, right? So when you look at a credit event, it's not just is the likelihood of a credit event. It's how big is that credit event going to be? Is it going to be like we saw in the UK with the gilt situation and their and how their insurance companies were so leveraged with these leveraged debt instruments that it was possibly catastrophic. And that's the problem, is that it's not just that there's a zero probability, it's that the probability is, if something does happen, it's likely catastrophic. And so that's the problem. That's where that risk reward calculation gets skewed.
Yeah, Mike, the question that I wanted to ask you is about what's happening with oil before we circle back to Bitcoin to end. Obviously, as I'm reviewing things, I saw there was a nice little jump in oil this morning, maybe 2%, not trivial, but not huge. But as a result, now I don't see it here, but largely of what's happening in the Red Sea, right? I think an Iranian warship entered the Red Sea. The Houthis are attacking everything that passes by, and I guess there's some fear the supply chain could be interrupted. But what's happening with oil?
So I want to stick my neck out and allow people to, at the end of the year, say, hey, potentially McGlone, you're an idiot. I think you're going to see a 40 handle on oil this year, maybe going down to $40 a barrel. Raise my hand. If I'm wrong, tell me I'm guilty. It's the way crude oil has worked since I've been trading it in the 90s in the pits when Saddam Hussein initially invaded Kuwait. It went to 40, dropped down to 20, and took 14 years to go back above 40. We're doing the same thing, but in a much worse case now. And that is what's happening in crude oil is the simple facts of elasticity of supply and demand are kicking in exponentially. So it's what you're seeing is noise. I mean, there's always going to be violence in the Middle East. We grew up with that. And can that cut supply? And if it does, where's it going to cut supply to? To the U.S.? No, that's changed. The world's changed. We are net exporter. If you see supply bottlenecks, that kind of makes us build up our inventories, which short term is bad. But what you see now is still the backward end of the downward cycle from Saddam Hussein, I'm sorry, not Hussein, but Putin's invasion of Ukraine. And I had to say one person because it's more him than a country. And it's very likely you have to shut off what's really pressured crude oil for the last 10 years, and that is the excess of U.S. and Canadian supply versus demand. It's accelerating. It's actually near 6 million barrels a day if you include liquid fuels. I come from a farm background. We got a lot of ethanol, which is now being matched by OPEC spare capacity. They're cutting as much as it's just a lose-lose. So I see crude oil right now 71. I'm going to write, probably publishing tomorrow, said to editors right now, if you saw me typing a little, the next $20 in crude oil I think is down. And that's towards 50 and gets to 40 to get cheap. You got to get cheap to shut it off, what's pressuring prices. And that's the U.S. Supply and demand surplus. So what you see out of OPEC is just, it's silly that people still focus on it because they're reading from the textbooks, and the answers have all changed. It's a quote from Einstein. The answers have all changed. The world's completely different. I think it's heading towards 40. And when people are saying it's going to 150, I'm like, you're ignoring copper and corn. You got to watch the whole space. So that's part of the reason I think I'll end with this. I think normal commodity deflation, just follow natural gas, you'll see crude oil at 40, is going to continue to fuel gold inflation. And part of that is giving the Fed reason to ease. But here's the problem. Let's say we have a little bit of an issue in the Middle East and crude oil something spikes to 90. What does that do for Fed easing and all this hope young people have for lower rates? Poof, it's gone.
Dave, you're muted.
I really wonder about that, Mike. I think that the Fed isn't stupid. I mean, they may be slow, they may do a lot of things, but it's not. Everyone knows that when oil prices spike, it actually holds back consumer spending, consumer demand. It is a tax on the economy. And so, yeah, the headline inflation goes up. I don't know precisely how the PCE deflator, which is their preferred inflation index, works compared to the CPI, but I'd be willing to bet that it will move less than the CPI in such an oil shock, and they'll see aggregate demand getting crushed. So I wonder if that affects it. I think that the real question from the Fed is James's question. They won't ease until financial plumbing looks like it's about to seize up or has already seized up, I think. And I think the world is basically saying they think something is going to seize up.
Or they see
doesn't that imply that, I was going to say, doesn't that imply that at the last meeting that Powell knows something we don't, because he basically said that they were going to pivot or ease without that happening.
It implies it's an election year in my very cynical way of looking at things.
Well, that's part of a bearish bent for crude oil. It is an election year, and the world's largest energy producer, net exporter, was more likely incumbents will get elected if prices are lower.
Yeah, and there's tremendous. I mean, look, is the Fed run by the executive office and by Congress? No, but there's tremendous political pressure and pressure from various non-political entities for the Fed to, start lowering rates soon. And they'll look, I never thought that we would get to the 2% normal inflation and kind of stay there. I think we're going to have a trajectory that shows that we are, whether or not the CPI, how accurate is that? We've talked about that ad nauseum. But I just believe that we're going to need and allow for higher perpetual inflation. And so in order to do that, you're not going to be able to crush the economy. Like that would be the nightmare scenario. There's two nightmare scenarios, right? There's the scenario where the Fed goes and raises rates again and, just annihilates the economy. Or the other one is the Fed eases up too quickly and allows for inflation to run rampant. So they're trying. Yeah, Mike, go ahead. But
I'm glad you mentioned it. Right? That's a key thing of human nature. I think people are underestimated when they're pricing Sofer to, for 150 basis points of cuts. I think that hiked too much, but that's a part of human nature that's changed forever, that we grew up with it. And that is the Fed had a good reason to ease through the last 12 years and somewhat aggressively because inflation was gone. But now we've learned that lesson. We learned what happens when you create too much liquid and you get inflation. So that to me is why we're supposed to get this normal reversion. Now, obviously we didn't get it last year in terms of equities, but the market's going to learn, I think, a lesson this year. That is, the Fed will just not ease with the ease it has in the past until it gets that bad. And they might, start with a 25 basis point cut if, stock market's down 10% and inflation's declining. But the key thing here is I want to point out in terms of the facts also, let's just look at PPI right now is deflating. It's down 0.9%, the latest PPI reading. The Bloomberg Commodity Index is down 11% over the same 12-month basis. I think that's going to get worse. I think there's going to be reason for them to cut, but I think for it to really get worse, you have to see that just a little baby reversion in the equity market. That's where I see the dominoes just tumbling for deflation this year. And here's the main definition of deflation. It always comes from a base level that just gets too high. I mean, it's always the way it's happened. 1929 was the best example in history. The base just got too high, and then we deflated until we debased the currency in 1933.
Yeah, listen. I mean, if things start to collapse, James, they're gonna save us, right? And then, but it's interesting when we look through all these Wall Street projections, and I do want to go right back to Bitcoin in a second. But if you read through them, almost every one of them actually thinks that inflation will kind of be a little bit stickier now, right? And that we will be dealing with exactly what you said, which is a slightly higher inflation environment. Maybe, it's 3% instead of 2% becomes the base level.
Yeah, and they're not gonna point to it. They're just gonna say that, well, we're comfortable with a range, of 2 to 3%, and then it might be more like 3 to 4%, but they'll hide it. And we have to have confidence in the US dollar. Why? Because we have to have confidence in our treasuries. And so it's a simple, it's not that complicated. Do I think that there's a diabolical plan from the Treasury and the Fed to debase the dollar and make people poorer in this country? No, I don't think that. I just think that it's just pure economics, how this is working out. And the Fed understands a range actually works better. He's more incentivized. The Fed is more incentivized to have a range that rather than overstay their welcome and push the economy into a recession or allow for that, Arthur Burns rate of inflation to rage out of control a la 1980s. It's easier to have a range and be able to dial and adjust accordingly, because it just makes their job easier, and it allows for the Treasury to keep issuing as much debt as it needs to, and it just inflates it away.
Yeah, that's the part I was
Your
thinking
incentive.
about. Yeah, exactly. Dave, do you have something to say before I move on to the Bitcoin?
Yeah, well, actually, I want to talk about Bitcoin. Just as we were just talking, I watched the IPERP, funding rate on Deribit go back to zero as OKEX was and Deribit were both offered right around spot, like no premium. Huobi is still well above spot. And then just as I was about to say that, it started moving higher again. So, it was down at 45.2. Now it's at 45. The IPERP around 45.4. It's just
nobody knows anything about nothing.
The point is not only is the price volatile, but all the people trying to do all this stuff are moving crap around. And if you can't see it, it kind of it reminds me of an old Odd Couple episode where I'll cut to the chase. There's some actor, basically it was about an occultist, and he said, we have a saying in the spirit game: what you don't know can hurt you very much. I will tell you that people who are trading directionally and trying to day trade or minute trade, who aren't looking at every single market and seeing what's going on here, are getting crushed. They're getting whipsawed by every single move, which is, professionals can make a lot of money when this is true. But if you have to ask yourself the question, what are other people doing? They're trading against you. And it's an observation from looking at the market, with professional tools and understanding what you're up against. Today is probably the poster child day for day traders who are sitting at home, who are on one exchange or one place, just getting run over constantly either way because they can't see what else is going on. It's fascinating. Sorry.
But just to piggyback on that a little bit, that's the key example extremes of last year. We all knew we were going to go into recession and Bitcoin was cheap. Okay, so we all know now we're going to go soft landing, guaranteed. And we see Bitcoin's expensive, but the difference is with the equity market. It's just those known knowns that, yes, they're going to be the halving. Yes, there's going to be ETF. They're just such known knowns that, great, a lot of that's been priced in. Dave, you nailed that from 15 to 45. And then I just look at, okay, here's the macro. You're a day trader, yes, but that's the key thing I like to point about Bitcoin is it's the #1 place on the planet. If you're any type of trader, and this is from someone who comes from the trading pits, all those ex-traders, they all have gone to Bitcoin. Why? Because there's no better place to set up your bots and just have it knock around. And today, I'm sure there's more people getting stopped out than there are people getting long.
Yeah, I haven't.
I mean, it just trades 24/7. It's incredible. That's the most incredible thing. It's psychotic. I mean, just when being in arbitrage, we would trade things in everywhere from Australia, New Zealand, all the way all overnight, and so. But you had a couple hours of reprieve here and there. So even though I was trading at 2:30 in the morning, from 4 or 5 p.m. until about 7 or 8 p.m., there was a nice little lull. There is never a moment that Bitcoin isn't trading. And I mean, it's an incredible, and that's what makes it so attractive, right? I mean, that's the point.
I mean, all I can tell you is volumes through CoinRoutes this past weekend, over 150 million average a day on a weekend. That's just because it's 24/7. But there's one thing I will point out that's interesting is I was just looking at it. The amount of liquidations for this size move is tiny. I don't know if you noticed that. I mean, short liquidations in 24 hours.
I mean, spot is pushing. Yeah.
It's but that's important, right?
Yeah.
The short liquidations, 133 million on a 10% move. That number is usually double that. So it's about half the amount of liquidations. And yet, as you pointed out, people were still paying more to be long, which is it's a really strange situation. I'm not gonna lie.
So listen, as we come to the sort of last few minutes here, I talked about earlier the fact that we're going to see this large, maybe massive marketing campaign for Bitcoin a la ETF, right? So it won't be a marketing campaign necessarily for Bitcoin, although that's how some of them are pushing. It'll be for the products, but it might actually just basically be a marketing campaign for Bitcoin. You're talking about 14 humongous companies, large budgets coming into Super Bowl commercial season. Not trying to say that'll happen or that that's even a good thing. And if we judge by the past,
it wasn't good the last time.
We're about to see this massive marketing campaign for Bitcoin and these ETFs with 14 people competing for AUM. We have 3 commercials already. I'm just going to show them. They're really short, but here's the Bitwise commercial. I don't know if you guys have seen this.
Thought you would like to know. Satoshi sends his regards. Look for Bitwise, my friends.
Okay, so that's a kind of a Bitcoin commercial. I know it's for Bitwise, but he talked about Satoshi, which is very vague. I'm surprised they went that route. This one's just for Bitcoin. This is Van Eck. That's a Bitcoin. That's just a Bitcoin commercial, by the way, right? Doesn't even mention the ETF. And then hashtags.
Amazing to me the tremendous impact that the home computers have had on everyone. And yet it seems that people I've talked to say that it takes you longer to do something by putting it into a computer and calling it up again than if you just kept simple records yourself in the house.
I thought that they'd all be marketing their specific product and how it, is.
But there may be regulations on just how much they can do that. It's it's going to be interesting.
That's why they're doing it, right?
Yeah,
yes,
exactly. Just get their names out there, and but they're all trying to find their footing.
I mean, people. Look, the reason Bitcoin is trading where it is and not already at your target price, Scott, is because there's still a lot of people who expect that Gary Gensler is playing the role of Lucy and we're all playing the role of Charlie Brown.
All the football.
With the football, for those who don't know, it's a very famous comic strip on your list.
Yeah, and I fully
reality.
Expect,
there's still people who
but
think
I
do it. Maybe it'll happen. I don't know. But
I fully expect that they will have their tickers and they'll be pushing them very hard once they do get approved. It's just right now you're in this funny period that this is signaling to the street that we're going to get approved. We're just going to get our name out.
These companies are not spending money unless they also agree there's a 90 to 95% chance it's going to happen. They still probably pricing in that 5%, 10%, but
yeah, probably. But what is clear is that there's going to be some massive jockeying between these companies to try to be some of the 3, 4, 5 winners out of this, because you're not going to, I just don't see 10 or 12 Bitcoin ETFs surviving for 5 years. Maybe I'm wrong, but I would see 2, 3, 4 as being the lion's share, and so they're going to spend a lot of money on marketing to get there. Clearly.
Love it. And I can't wait for it. I'm here for it. Now it's 10 a.m. Guys, a little bit of housekeeping. I saw a comment here. Does Scott even read anything from here? Well, that made me notice that the X comments are now coming up in my StreamYard feed for the first time. Hey. So we used to only see the YouTube comments. So the answer is yes, I am seeing those now, guys. That's A. B, guys, we tapped just on YouTube for a second there. We tapped 2,000 viewers. It was really exciting. I remember not so many weeks ago when we were tapping 1,000 viewers. So clearly there's a heavy thirst for this. Really, really exciting. And to that end, if you are watching this on X, you scroll off and all of a sudden it stops. I don't know if anyone's actually tried to watch live video on X. It's really subpar. So if you are, come on over to YouTube, subscribe here and watch it. It's a much probably better experience, and you might get more comments. See, someone just said, Jiro said, whoop. That means I'm seeing it. See, I saw your comment there on X. Guys, very excited to start the new year with all of you. I haven't talked to any of you about this, but I have big plans for Macro Monday. Outside of my channel, I really kind of am thinking about separating it and creating it into something bigger, because I think we have something special here that's different from the rest of the content. So I plan to start aggressively pushing and marketing this show and creating more content around it. You've probably seen all the shorts. I've been cutting your guys' faces up or my editors have and sharing it. And those, I absolutely love those things. So I want to thank you guys. I know, man, it's like almost a holiday first day. We all show up. You guys are amazing, and Macro Monday is going to become huge in 2024. I can just tell the three of you and everybody else that. So, guys, thank you, everybody. Thank you for watching. The last housekeeping is that Crypto Town Hall on Spaces, after a 2-week hiatus that was not my choice, is back today. So we will be back on Spaces at 10:15 a.m. Eastern Standard Time. Thank you, gentlemen. I will see you soon.
See you, fellas.
That's dope.